Look, if you're trading these markets and you don't understand the geopolitical playbook I'm about to lay out, your capital isn't just at risk, it's being deliberately hunted for liquidation. $265 million. That's the amount of capital that was surgically carved out of the market. We're talking $250 million, just gone, wiped from over-leveraged crypto shorts. But here's the twist. This wasn't some random market event. No, this was an ambush.
And get this, it all went down in just 15 minutes. Started with a single headline, which triggered a violent pump and ended in a mass liquidation event. Now, by the end of this breakdown, I promise you, you will know the exact 3-step playbook they're using to engineer this stuff, so you can see it coming instead of getting caught in the crossfire. All right, so Section 1, the $265 million ambush. Let's break down exactly how these headlines created a full-blown liquidity crisis. The whole thing kicked off with a single news announcement about the escalating conflict in the Middle East. And the chaos that followed, it was immediate, and it was brutal. But what's really wild is how everything moved in perfect sync. I mean, look at this. Crude oil instantly tanks 14%. U.S. stocks, they surge. And Bitcoin, it just rips right back above $71,000. This wasn't a coincidence. This was a coordinated pump, and it was designed to do one thing and one thing only: trap every single trader positioned for more conflict and just systematically wipe out their short positions. Okay, so this brings us to the core of the deception. You have to understand, the market wasn't moving on reality. It was moving on a headline, a complete fabrication. So let's pull back the curtain and deconstruct the exact fake news cycle they used to pull this off. And here it is. This was the weapon. A headline announcing a productive peace talk and a supposed 5-day pause in military strikes with Iran. That's all it took. This was the bullish catalyst that poured gasoline on the fire, fueled the entire pump, and sent risk assets to the moon. But then, almost as quickly as the US markets exploded on the news, the whole story completely flipped. Iran comes out with an official denial. They state, flat out, no negotiations are happening. And just like that, Brent crude surges right back over $100 a barrel. The rug pull was already in motion. And this slide right here just perfectly illustrates the gap between the headline and reality. On the one hand, you have the market celebrating this supposed 5-day pause. But on the ground, new airstrikes were hitting Iranian natural gas pipelines. And for all of you watching in the US, listen to this. At the exact same time, a massive explosion gets reported at a major oil refinery right there in Port Arthur, Texas. The piece was a total lie, a fabrication cooked up for one reason: to manipulate the market. You're watching Crypto Global News, and I have to be blunt. If you are watching this without a subscription, you are missing the alerts. You're flying blind. Click that subscribe button right now to stay on the timeline. It costs you nothing, but it's what lets me keep getting this critical intel out to you. Okay, let's get into the blueprint itself, because this wasn't some random one-off event. Oh no, this was the execution of a known, repeatable strategy. We are talking about a literal blueprint for market manipulation. And we're not guessing here, we have confirmation. Analysts have verified this is the exact same playbook the administration used back during the May 2025 China trade deal. So this isn't speculation. It's a documented, predictable, and frankly, repeatable maneuver. So here it is, the 3-step playbook, plain and simple. Step 1, the lie. Announce fake negotiations. Just inject a totally artificial bullish story into the market. Step 2, the goal. Use that fake news to deliberately slam the brakes on overheated energy markets, just to relieve some pressure. And finally, step 3, the trap. Use that relief to engineer a fake bounce in the stock market, catching everyone who bought the story completely off guard. So why go to all this trouble? Why now? Because the 10-year note yield had just screamed past 4.5%. Now, for those of you who track this, you know that kind of pressure on yields puts an immense strain on the stock market. This whole geopolitical theater, it was designed specifically to fight that pressure and manufacture a temporary rally out of thin air. All right, let's bring this down from the 30,000-foot view to where the rubber meets the road for us crypto traders. Because this playbook doesn't just rattle the oil and stock markets. It leaves fingerprints, specific, predictable patterns on the charts. We're going to use XRP as a real-time case study to see exactly how this manipulation shows up. So right in the middle of all that manufactured chaos, a crystal clear signal appeared in XRP. The price took a nosedive, a big, sharp wick down on the chart. And where did it land? Perfectly. Right in its major long-term support area, the macro demand zone at $1.36. That wasn't an accident. That was the orchestrated shakeout. And right after it tagged that demand zone, it bounced, came right back up to $1.42. But, and this is critical, this is where you have to be incredibly careful. This first bounce has an extremely high chance of being a fake out. It's designed to suck in hopeful buyers right before the next leg down. So the only number that matters right now is this one, $1.43. A daily candle closing above that critical resistance level is the only thing that would confirm a real bullish reversal. Until we see that happen, the risk is still firmly to the downside. So let's just recap the technicals here. The demand zone at 136, tested. That's good. But the current price at 142, huge fake out risk. And the key level we need to break, that critical resistance at 143, is still completely unclaimed. So what's the play here? It's a great question, and I've actually started a thread about it in our YouTube community post. I want to hear your thoughts, so jump in there and let's talk strategy. Look, for the fastest, most time-sensitive alerts on key levels like this, you really need to be in my Telegram. Things move too fast for anything else. Scan the QR code on your screen right now, or hit the link in the description and join us. It's where you'll get this info first. Okay, Section 5, what happens next? More importantly, how do you protect your capital in a market where this kind of manipulation is, frankly, the new normal?
So let's boil this all down. These are your key takeaways, the rules you need to survive. Number 1, geopolitical headlines aren't news. They are weapons, plain and simple. 2, these billion-dollar liquidity squeezes are not accidents. They are engineered. 3, the 2025 playbook is live, it's active, and you can bet it's going to be used again. And 4, and this is the most important one, your final confirmation, your signal to act, must always come from the charts, from the technical levels, not from the headlines. If this breakdown was valuable to you, do me a favor. Hit that like button and share this. You might just save another trader from getting liquidated.
So that's where we're at. We have the playbook. We know it's being used. The underlying geopolitical conflict is only getting hotter, which leaves us with one burning question. Where are they going to engineer the next market ambush?
In my very next briefing, I'm going to reveal the 3 assets I believe are most likely to be targeted next. See the card on your screen? Click it. Subscribe now so you are alerted the moment it drops. You do not want to miss this one.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.